Okay, welcome everyone. So, welcome to Accounting 1. We are going to continue with Learning Unit 3, which we started last week, which talks about your value added tax or VAT. And we also looked at the markup percentages. So, today we're going to continue do some more additional exercises to just make sure that you guys get the concepts well grounded so that when you get to a test or in the assignment or the exam, you at least know what is going on. Okay, so before we start, let's quickly look at what is the learning objectives again. So last week we said the first one is that you need to be able to explain what the value added tax system is and how it works. And then you had to compare it to the traditional GST system. Now, what I told you is the second bullet point, I haven't really seen them asking it. So where I would focus your time is more know the basics about VAT. So what's the current VAT rate? What is it charged on? So it's charged on the consumption of goods or services. And then make sure that you know the difference between what is a standard rated, a zero rated, and exempt supply, as well as your non-allowable items, because they love asking that either in the table format or they will give you a scenario and then ask you indirectly what type of supply are we looking at. Then they sometimes do ask the two bases to explain what is the difference between the invoice and the payment basis. Now, just to remind you guys, payment basis is based on as soon as the payment occurs or you buy something, VAT will be raised, whereas invoice basis is generally the earlier of receipt or invoice, and that is the one that is most commonly used by most VAT vendors in South Africa. Then we will chat again today about what is a valid tax invoice and what is the difference to a bridged invoice, because there is a difference and they like asking that as well. And then we are going to focus again on how to do the VAT calculations and how to do the markup calculations. Now let's quickly just recap, just to refresh your memory what we discussed last week, because I know it was a lot of information. So when we look at VAT, we've got three types of taxable supplies. We've got your standard rated, so that is those items or services that we render, but it will always be charged at the standard rate, which is currently 15%. Then your zero rated and your exempt supplies. Those are the lists in your textbooks, once you get your textbooks, that you need to know. Now, zero rated is generally more your basic food stuff and relates to any exports. Now, those are items where we do levy VAT, but it is at a 0%, which means we are effectively paying R0 VAT. Now, as I said in class last week, this percentage could potentially be changed in the future, and that is why government has clearly indicated it's 0% for now. Exempt supply, on the other hand, are specific items where no VAT is charged because of the fact that they do not necessarily meet the definition of an enterprise, or it is not the supply of goods or services, and normally other forms of taxes are rendered on those. Then we also said we've got certain non-allowable items. So what that means is you paid VAT on it when you acquired it. But because of the fact of the type of expense that you incurred, SARS has said for those specific ones, you are not allowed to claim the input VAT. So you can't claim the VAT back if you purchase something like that. Now, there's only three that you need to know of. The first one is entertainment expenditure. Now, the most common one they generally ask you guys is anything relating to your staff area in your office. So for example, if you put a couch or kettle in there, that is viewed as entertainment. Similar, if you take clients out, that is seen as entertainment. There are exceptions, but they do not cover in this course. Then your passenger vehicles is basically a normal motor vehicle. So the general definition says anything that can seat 2 to 20 people would be seen as a passenger vehicle and the input VAT will not be claimable. And then club fees and subscription fees. So the fee I pay to belong to a specific golf club or athletics club or any sports club would be denied. However, if it's to a professional body, so if I need to register as a professional to be able to practice, so whether you're an accountant, a lawyer, an engineer, a doctor, it doesn't matter. So those professional subscription fees, you would be able to claim the input VAT. But any other type of club fees or subscription fees would be non-allowable. Now, when we talk about VAT payable, VAT refundable, that is to work out the net amount that is either being paid over to SARS, so that we call VAT payable. VAT refundable is the net amount SARS will pay me. Now, how do I calculate it? It's the difference between your output VAT less your input VAT. So your output VAT is the VAT that you raised on the supply of goods or services to your customers. So those are your sales. Input VAT is anything that I've purchased from a supplier, and that can either be an expense or an asset that I've acquired. And then the difference between that will give you your payable or refundable amount. So let's quickly just talk about output VAT and input VAT and what are they exactly. So output VAT is the value-added tax that you calculate and charge on your own sales of goods and services if you are registered for VAT. So we only add VAT if we are registered as a VAT vendor. Now, for accounting purposes, output VAT will always be accounted for as a liability. Okay, input VAT, on the other hand, is the value-added tax that was added to the price when you purchased the goods or services that you are liable to VAT. So what basically happens is your supplier included that VAT portion, you have to pay it over to them, and then they pay it over to SARS. And that portion is the asset. Okay, so what happened? You paid, let's say, for argument's sake, $1,500. That's inclusive of VAT. Then input VAT, you would be able to claim the portion of VAT that was included in that 1,500. You would be able to claim back from SARS, and that's why it's seen as an asset. Okay, when we talk about the calculations, you need to make sure that when you read a question in a test, in the exam, in your assignment, to make sure are the amounts inclusive, exclusive of VAT. Now, what we love to do in a test or an exam or an assignment, we tend to give you both. We know students gloss over the information, and this is how we catch you out. Make sure that you highlight this when you see it in your test or assignment or wherever, to make sure that you do not lose marks for something easy. Okay. Now, if the amount excludes VAT, that is what the cost was before we've actually added VAT on. Then there's different ways of calculating it. So the first one is you can multiply it with 115. So that is the original 100 plus the 15% VAT will give you 150. So then we multiply it with 115 over 100 if the amount was inclusive and you want to get it exclusive of VAT. If I want to convert an exclusive amount to an inclusive amount, I can just multiply it with 1,15 and I'll get to the inclusive amount. Or alternatively, if it's easier for you guys, if an amount does not include VAT, you can just multiply it with 15% to work out the VAT component, and then you add it to the amount that excludes VAT to get to the inclusive amount. Where it already includes VAT, this is where it gets a little bit more tricky for students to get it back to an amount excluding VAT. So you multiply it with the 100, so what do I want? Over the 115, which is what we currently have, the amount inclusive of VAT, or you divide it by 1,15. Now, if you want to work out the VAT separately and then work it back, in this scenario, your VAT component, you would multiply it with 15, but not over 100. You would put it over 115 instead. And then you can deduct it from that amount inclusive of VAT, and you would get back to the amount excluding VAT. Now, what I would suggest is go play around with these formulas at home while you're not stressed and under pressure to see which one of those different methods you prefer, and then you stick with that for the rest of the semester. Okay, so this is just calculating the VAT component. So only the tax that we are paying is being calculated. Now you'll see we either have the amount that includes VAT already or the amount excluding VAT. So this is what I was talking about previously. You could calculate the VAT if it's inclusive like this and then deduct it to get to an amount excluding VAT. So how do we know it's the VAT amount? The 15 represents the VAT, is at the top. And then at the bottom here is the 115 because this amount is inclusive of VAT, or it's 100 because it's exclusive of VAT. And that's how you know we are busy with just calculating the VAT component and not an inclusive or exclusive amount. Then the markups, there are different formulas that you can use to get to the markup on cost and the markup on selling. What is very important though is to remember that when you do the markup on your products, it is before we've even added the VAT. So this cost price and selling price will be excluding VAT. And then once you've put the markup on, then only do you add the VAT percentage. Okay, because otherwise we will dilute the VAT percentage and we would not have actually added the correct tax amount. Okay, so this is very important. The one in your textbook excludes the VAT, so the one we're going to look at today. However, in the test, they will include the VAT to see if you know that you have to remove it. Okay, this we've already recapped. Okay, before we start with some of the new concepts, do you guys have any questions just based on the VAT fraction or the different types of supplies or input and output VAT? Do you have any questions on that? You can either pick up your mic or you can just put in the chat function. If you're okay with the explanation so far, just show me a happy face, thumbs up, or whatever emoji you want. If you've got any questions, yes, Mbali. You can put on your mic if you've got a question. Mbali, do you want to ask me a question? Sile, I see you've got a question as well. You want to?
No, ma'am, I have no question. I was just saying I'm happy with the process.
Okay, so if you, this lower hand function, if you put that on, it's almost like you're raising your hand in class. So if you are happy with it, just put a thumbs up in the chat function, then I know you're happy. Otherwise, if you've got a question, the raise your hand function is almost like putting up your hand in class. Then I know you want to ask me something. Okay, so if you guys are fine for now, then let's discuss what is the difference between a tax invoice and an abridged invoice. Okay, so let's start off with the easy stuff. I put a little tax invoice there on the screen for you guys to have a look at what it would look like more or less. Okay, so what do you think is the minimum requirements of a tax invoice? Just by looking at the template that is on your screen. Okay, let me rephrase it as well. What would you expect to see on a tax invoice?
Independent standard view or business standard view?
Okay, sorry, just repeat that.
Is the tax invoice from a business standard view or a personal standard view, like one person?
Okay, so it doesn't matter. It can either be a business or an individual. You would see similar information irrespective of whether it's a company or an individual. But
Okay,
to
good to
make
know.
it easier, so let's say this is from it's a company basically.
Okay.
Okay, so what do you guys see on the screen? What information is there? Okay, they haven't filled in all the fields, but it gives you an indication what should be there. Okay, so I'm going to start with the obvious one, and then you guys can add on to what I say. Okay, so Rafeel says there needs to be an address, a date, and an invoice number. Okay, so that's correct. We do have an invoice number to make sure that we know exactly which invoice it is and that duplicates do not occur. When we talk about the address, Rafeel in Lino, make sure that you clearly specify that it's the address of both the supplier as well as the customer. So both the buyer and the seller's information needs to be there. So you put their name, their address, and when we talk about tax number, it's the VAT registration number. We do not talk about the tax number for the reason that it could also refer to income tax. So you need to be specific when you say tax number that it's the VAT registration number. So for each buyer and each seller, you give their name, their address, and their VAT registration number. Now that information needs to be on there, otherwise it is not a valid tax invoice. Now other information that would also be on there is you will see here at the bottom, they've got a description. So they tell you what type of goods they've purchased. They also tell you the quantity and the unit price per product. And then we work out the total amount per line item. Now what's not on the screen here, because I cut it off, is you'll see here's a subtotal. Now that is the amount before we've added VAT on. Okay, and then just underneath there would be a line item that says VAT, and it would clearly indicate what percentage has been charged. So whether it's been 15%, 0%, you would add it on there, and then you will get the total inclusive of VAT. Now, other things you would generally see on a tax invoice at the bottom is the settlement term. So when does your buyer need to pay you back? That will also be disclosed on there. And that is basically what you would see on a tax invoice. But now my next question is, what is the abridged tax invoice and how is that different to a tax invoice? What do you guys think? I guess I'm going to repeat the question. What do you think is the difference when we talk about an abridged tax invoice? How does that differ from a normal tax invoice? Do you have any ideas? What do you guys think? Okay, so I've got one that said they're not sure. And the rest of you, what do you think? Okay, so let me help you out. So a bridge tax invoice would, for example, be if you take a cash slip. Now, if you think about a cash slip does not have your details on there when you receive it. It does not have your VAT number on there. Is that correct? If you think when you receive a cash slip at the shops, does it have your buyer information on there? Okay, so Lino says no. Does it have the
No,
word
ma'am.
tax invoice on it? Sorry? You can repeat what you said? Okay, so it does not have the word tax invoice on there. It does not have the buyer's information on there. Now, a bridge tax invoice does not actually qualify as a tax invoice. It does not have all the minimum requirements like the name, the address, and the VAT number of the buyer. So that's the key things it doesn't have on there. Now, what the rule is if an amount is less than 5,000 Rand, SARS does not require you to have a full tax invoice. So that is when we call it a bridged tax invoice. Because of the fact that the values are quite insignificant and they're quite small, SARS have decided instead of creating a bigger burden on your buyer to try and get the correct information as well as your seller, anything under 5,000 does not have to have all of the information. But what some systems do to overcome this, for example, if you go to macro, you've got a macro card, and on that card, when you register for it, you actually capture all of your information. So when they swipe that card, when you check out, they take that information from your customer card and then they upload it onto the invoice. Okay, so that is how a lot of your businesses have tried to overcome this exception. So if I buy something, instead of having them manually fix this on the invoice for me, they can just pull the information. But the general rule is any invoice under 5,000 Rand, it does not have to have the name, address, and VAT number of your buyer. But as soon as it's a tax invoice exceeding 5,000 Rand, it needs to have all of those requirements in order for the buyer to claim the input VAT. Okay, so that is why we have these invoices and the specific requirements so that the person that wants to use it can claim the input VAT. If they do not have the correct documentation, SARS will deny their claim and they will not get a refund. Okay, so that's the main reason behind this. Okay, before we move on, do you have any questions on a tax invoice versus a bridged tax invoice? Do you guys have any questions?
No, ma'am.
Okay, then we'll continue. Okay, so for homework, I asked you to do activity 3.7. Did you guys actually do it for homework?
Yes, ma'am.
Okay, so for the guys that did it, what I want you to do in the chat function, or you can put on your mic, you can tell me what number A is. So, and how you calculated that amount. Okay, I'm just going to stop sharing this and I'm going to open the Excel so that I can show you guys the calcs as we go as well. I'm just going to share the Excel file. Just let me know if you can't see it in a few seconds. It normally takes a bit of time just to get loaded up there. Okay, I'm going to increase the size just so that you guys can actually see properly. Okay, can all of you see the Excel file? There should be an Excel file on your screen.
Yes, ma'am.
Okay, so for something like this, when they give you a table, the first thing I would suggest you do in a test in the exam is add here at the top what the formula is, or how do you actually calculate it. So you'll see here the cost price I said is 100. Then the profit is your markup. Now, because of the fact that we have different markup percentages here, I just wrote your markup referring to this column. Okay. And then the selling price is your 100% for your cost plus your profit percentage, which is up here. That gives you a selling price percentage. Okay, so this is your starting point to help you guys navigate getting to the answer. Okay, so who can tell me what is the profit under number A? How did you guys calculate it? You can either give me the answer or you can just give me the calculation in the chat function, or if you feel comfortable, you can pick up the mic and you can explain it to me.
Ma'am. For A, I really just said it was 10. I said 100 divided by 10%.
Okay, so you divided it by 10%.
Yeah.
Okay, you got to the correct answer, but how you explained it is not actually what the formula would look like. So I'm just going to explain it to show you guys how you should do it, because it's not always going to be exactly the same if you divide it by 10. So in this scenario, because it is 10, it worked out, but it won't always work out that way. So how you calculate it is you take the 100, so the initial 100 Rand, which we know is the amount excluding VAT. Then we know the markup percentage is 10. So I multiplied it with the 10, and then I divided it by the 100, which is represented by the cost price. And then you get to 10 Rand. So you got to the correct answer. So what we do is, even if you follow a different method and you get to the correct answer, I will still give you the marks, because of the fact that I said different people have different ways of getting to an answer. And because there are so many ways of getting to the same answer, we take that into account. I don't expect all of you to do it the same way I do it. I want you to do it the way that's easiest for you. Okay, at the end of the day, you are the person writing the test and the exam, and I want you to find what works for you. Okay, so if the profit is 10 Rand, what would number B be then? So if we said the profit is now 10 Rand, what would B's answer be? Okay, so Nicholas says 110. Yes, Nicholas, that is correct. Okay, so there are different ways of calculating it. So I've added both the calculations here for you guys. So you could either take the 100 Rand and then add the 10 Rand that you've calculated, or alternatively, you could have taken the 100 plus the 10%, which is the percentage the sales price represent, which is 110. So you could have multiplied with the 110, that's the amount you want, and then divided by the 100, that is the amount we currently have. And you would have got to exactly the same amount. So you can see in the test, there's different ways you can get to the same answer. So it doesn't matter which method you prefer, you would get to the same answer. Okay, now we're going backwards. Who can tell me what is the answer for C? So what is C's answer? Okay, so Mabali thinks it's 375. Okay, any other takers? Anyone else agreeing with Mabali, or is there someone that has a different answer? Okay, Mabali, do you want to explain to me how you got to your answer?
I took the 500, times it by 25%. Okay, times it by 25 over 100. Then I got 125, which is the amount for profit. And then I took the total amount, well, the selling price amount, and minus the profit. Then I got 375.
Okay, so let me just repeat what you said. So you took the 500 Rand, which is the selling price, and you multiplied it with 25 and then divided by 100 to work out the profit, correct? Okay, now I'm glad you did it this way because this is where a lot of you guys actually make the same mistake in a test. When you look at the selling price, if you look here at the top, I told you the selling price is the 100 plus the markup percentage. So the way you calculated it or the way you wanted to work it out is absolutely fine. But where you went wrong, and this is where a lot of you actually miss it, is you forgot to add the markup percentage to the amount that you divided by. So instead of dividing it by 100, you're supposed to divide it by 125 to get to the correct profit amount. And then when you do the deduction, you would actually get to the correct amount. Okay, so let me show you. The answer is actually 400 bucks. So you were close. So what you do is you take that 500, you multiply it by 100, and then you divide it by 125. Or if we take Mbani's method, you would have done the following. You would have done the 500. You would have also divided it by the 100 plus the 25. So that's the 125. So remember that 500 represents the amount after we've added the markup. So that's why it's 125 and not 100. And then we would have multiplied it with the 25 Rand. Okay, so she went and worked out number D first. So she would have worked out 100 Rand for the profit, and then her next step would have been the 500 less the 100 would have given her 400 amount. Okay, so let's just make this number 1, and then once you've worked that out, you move on to step number 2. Okay, so Mbani, do you see where you went wrong in your calculation? Does that make sense to you? Okay, just for interest's sake, how many of you got the same amount that Mbani worked out and made a similar mistake? Okay, so what I always tell my students, I rather you make the mistakes now in class. This is why we do these questions, to help you navigate the most common mistakes students make. So if you got it wrong, it is fine. This is why we're doing these types of questions, to help you figure out what is the concepts that you missed. Okay, so you would have, because of the fact that you made a mistake there, we would have then given you a method mark for part D that was based on your answer in C. So you would have lost 1 mark as opposed to 2. So we normally look at how you calculate it, and then we give you a method mark if it's something like this. Okay, so you won't lose all the marks. So just remember in a test, make sure if it's selling price, remember to add the markup percentage before you do the division part of it. Okay. Now I've already worked out part B indirectly based on the discussion. So we all know the answer is 100 bucks. Okay, so now the next one. Now they give you the VAT amount. This one is where a lot of students struggle. So who can tell me, how did you guys work out number E?
Um,
Yes.
so number E, I basically did 750 divided, times 50% again, and I got the answer of 375.
Okay, so you took the 750 and you multiplied it with 50%.
Yes.
Okay, now remember that 750 is 50% of whatever the amount is in E. Okay? So instead of
Yeah.
multiplying it with 50%, you will do exactly the opposite. You will multiply it with 100 over 50. So you're basically dividing it by 50%. Okay, let me show you what I'm talking about. Okay, so the answer is 1,500. Now, because the 750 is 50%, that is 50% profit based on this amount. So if we said it is 375, if I multiply 375 or 50%, I will not get to 750. Okay, so because this represents the 50 up here, and I want to get it back to 100%, I am going to divide it by 50 and then multiply by 100. And this is how I worked out the original cost. Okay, so just remember, if they give you the profit, you are literally changing the equation around. So you don't multiply it with a 50, you multiply it with 100 over 50. So you just swap the equation around to get to the correct answer. Okay, does that make sense? Okay, so you multiplied 750 by 2 since it's 50%. Yes, that would also have given you the same answer, Kaya. That's also fine. Okay. Did anyone work it out differently? Okay, let me just put Kaya's version in here as well because that would also be correct. So the way they got to the 2 is they took 100 divided by 50 gives you a multiple of 2. Okay, so that's how they got to the answer. Okay, did anyone work it out any other way? Okay, do you guys understand how to get from a profit amount to the cost amount? Does this make sense to you? Okay, so if we know the original cost is 1,500 bucks, and we know that the profit that we're adding to it is 750, what would the selling price be for that product? So what would F then be? Okay, so let me repeat that. If we know the cost price of the goods was 1,500, we're adding a profit of 750 to those goods. What is my selling price? Yes, thank you, Tatu. So our selling price is 2,250. So once you've worked out the cost price, you could literally just add the profit to the cost price, or alternatively, you could have taken the 750, you multiply it with the 150, so it's 100 plus the 50 markup, and then we divide it by 50. So we divide it with what the 750 represents, which is the 50% profit, and I want to convert it to a sales price, which is 150% of the original price, which is the original cost plus the profit, is how I got to the 150. Okay, so then, now they've given you information, they've given you a profit, they've given you a selling price, and then they ask you to work out this profit percentage or the markup percentage. Now, this is a scenario where you would first have to go work out the cost to be able to work out the percentage. Okay, so before we do the percentage, let's work out what was the cost price. So what is number H? Okay, so Over King says it's 4,000 Rand, and that is correct. So how did we get to the answer? We took the 8,000, we deduct the 4,000 profit, and then our cost price would be 4,000. Okay, now let's work out the profit. So if my cost is 4,000 and my profit is also 4,000, what is my markup percentage? 100% of a king, that's correct, and Pile, that's also correct. So if we've got 4,000 here, we've got 4,000 there, that means my markup is 100%. Okay, if you worked out the percentage before that, so there were other ways to work it out as well. So if you worked out the cost first, you would use the second option. Alternatively, you could have taken the 8,000 divided by the 4,000 to work out what is the percentage, and then you deduct 100% to get to the percentage. So that is an alternative way of calculating it. I found students do this one better if they work out the cost first and then only do the percentage, because it helps them see the percentage better. Okay, but there are different ways of getting to the answer, so that's why I've included both options. When you guys go through it, you can decide which one you prefer. Okay, so last one. What is the cost of the item under I? Who can tell me what was the cost for the last product? Okay, so I'm going to repeat the question. Who can tell me what is the answer for number I? So if we've got a selling price of 2,200 bucks, we've got a markup percentage of 120. What is the cost? So let's just quickly go back to the table here. So if our markup is 120, what percentage does that 2,200 represent? Okay, so let me just repeat that. What percentage does that 2,200 Rand in that table of ours represent? Who can tell me, guys? Are you guys still with me? Can you hear me?
Yes, ma'am.
Okay, so let me repeat that. At 2,200 bucks, if our profit percentage is 120%, how much would the sales percentage be? Okay, so Zandile thinks 120. Okay, Zandile, just look at the top of my screen. In column E, what does the heading say? Just above B. Do you want to change your answer maybe? Is there something that you might have missed? Okay, so let's talk here. I see I've bold you guys now. So if our markup is 120%, and I want to know what the sales percentage is, it is the 100% here plus that 120. Now, if I take 100 plus 120, I get 220. Okay, so this means this amount divided by 220 multiplied by 100 will give me this. And that is how you would get to the answer. So you take the 2,200, you multiply it with the 100, we want to get to the cost, but the sales price is currently the 100 plus the 120 markup percentage, which is the 220. And that will give you that percentage. And then the profit in that table would be the 2,200 less the 1,000 we worked out to give us 1,200, or you could have taken the sales amount, multiply with the 120, the profit percentage I want to work out, divide by the 220 would give you exactly the same answer. Okay, so for this table, do you guys have any questions on this? Do you guys have any questions? Okay, so let's move on to the next table that was also in that question. So also part of that is they've given you a table with markup percentage and the gross margin percentage. Now who can tell me what was the difference between a markup percentage and a gross margin percentage? Okay, I'm going to repeat the question. What's the difference between a markup percentage and a gross margin percentage? Do you guys know? Do you want to just indicate in the chat function where you're at? Are you unsure? Okay, so Ninkubele says it is gross margin is on selling price and markup is on cost. That is absolutely correct. Okay, so I'm just going to finish this exercise and then we will take a 10-minute break. While we've got the answer, let's just discuss it. So for this type of question, what I would suggest you do is you complete a little table with the cost price, the percentage there, the profit percentage, and the sales price. Now for the first two, we know it's gross margin, so it's going to be a markup on the selling price, whereas the markup percentage is going to be on the cost price. Okay, so if we fill in the first one, we know the profit is 25%. Now, because we know that it is a markup on sales price As soon as we see on sales price or gross margin, we automatically change the sales price to 100. Then to get to the cost price, we take the 100 less the 25 gives us a cost price of 75. Okay, so that's how you complete the table for the first one. The second one, you follow exactly the same rules. So you start with the 50, you've got 100 for the sales price, cost price is 50. That's how you work out this table. Then with the markup percentages, we work from the other side. So markup, we said it's on cost. So you add that percentage to the cost price. So that means our cost price is our starting point, and that will be 100. Then we fill in the profit percentage as per the table, which was the 50 and 300. And now we add these two together to get to 150 and 400. Now, once I've got that table, now it will be a lot easier to do the calculation. Because I know the markup is based on the cost price, I am going to take the percentage and divide it with the amount under the cost price column to get to that profit percentage for the markup. So your markup percentage is actually 33 1/3, and you take the profit, divide by the cost price to get to the answer. So that's how I convert a gross margin percentage to a markup percentage. And we're following the same principle for the second one. So we take the profit, which was 50, divide by the cost price, which is 50, which would give you 100%. Now, when we convert markup to your gross margin, what we're going to do is we know it's the profit on the sales price. So we're taking the profit, divide by the selling price to convert the markup percentage to a gross margin. So we take the profit, which is 50, divide by the selling price, which is 150, and that gives our markup percentage of 33%, or gross margin percentage. And then the second one is you take the 300, divide by the 400, gives you a gross margin of 75%. Okay, do you guys have any questions on this? If you see something like this in a test, will you be able to do the conversion? Do you know how to convert the one to the other? Okay, can you just indicate in the chat function, do you understand what I've explained? Or is there something I need to re-explain? Okay, so based on the responses, those that do understand. Okay, then part E, which I didn't put on the screen here. Okay, so part E in this question was exactly the same. We just had to go work out, similar to this table. Now you just had to go work out both of the amounts. I'm just going to show the calculation. The concept would be exactly the same. So you would take the information they've given to you to work out the profit over cost price, which give you your markup percentage, and the profit over selling price would have given you the gross margin. Okay, so they can either give you, in a test, they can either give you percentages or they can give you physical rand values. The concept is exactly the same with the table. You just then use the rand values for your sale and your profit, and you would get to the same percentage. Okay, so we are going to take a 10-minute break. If you can be back at 11:05, then we'll start or continue with the session. If you've got any questions, you are welcome just to type it in the chat function, or if you think of something during the break, then we can address it in the beginning of the next session.